Welcome back to the channel. Today, we're going to talk about money. Not just how to make it, but how the entire global system that governs every single dollar, euro, yen you've ever touched actually operates. Think of the financial system not as a boring library full of spreadsheets, but as a giant, complex, and slightly chaotic money factory. Most people think banks just hold their cash. Bless their hearts. That is like saying the internet is just for sending emails. The reality is, there are 8 key players in this financial universe, and they are not just moving money, they are actively creating it, multiplying it, and sometimes accidentally blowing it up. Let's meet the masters. First up, we have the undisputed heavyweights, the godfathers. The ones who decide if the music starts or stops. Central banks, we're talking about the Federal Reserve in the US, the Bank of England, Bank Indonesia. These guys are the governmental arms that get to decide how much money is swimming around the economy. Their job description is simple: maintain price stability and achieve full employment. How do they do this? Through monetary policy. When they need to inject life into the economy, they print money and flood the markets, often through a fancy process called quantitative easing, or QE. It's like turning on a giant faucet labeled cash. When things get too hot and inflation is running wild, they reverse its quantitative tightening, or QT, yanking the money back out, draining the pool. These decisions affect literally every price tag you see. Now, who carries out their orders? That would be the tireless workhorses, commercial banks. These are your standard banks, the ones with the cheerful logos and the terrible coffee in the lobby. You deposit money, they give you a loan. Simple, right? Wrong. When a commercial bank gives you a loan, they don't reach into a vault containing someone else's deposits. Oh no, they create that money out of thin air, digitally, on the spot. They operate on a fractional reserve system, meaning they only have to hold a small fraction of the deposits they receive. Every time they loan money, they are essentially creating new money. This is why they are the engine of the entire economy. They are the tireless, slightly terrifying money creation machine. Next, we move to the institutions dedicated to ensuring you do not end up eating ramen noodles in retirement, and that a small accident doesn't bankrupt you. Meet the pension funds. If the financial world had a grumpy grandpa, it would be the pension fund. Their job is the longest game imaginable, making sure people who retire decades from now actually get paid. They are massive, collectively controlling over $60 trillion globally. Their strategy: massive diversification. They own everything: stocks, bonds, real estate, entire private companies, and probably that weird sculpture in your town square. They are the definition of slow and steady wins the race. Then we have insurance companies. These guys are professional risk managers. You pay a small fee, a premium, and they promise that if your house burns down or you accidentally drive your car into a lake, they will pay for it. The catch: They collect mountains of cash asterisk. Before asterisks, they have to pay out. That massive pile of collected premiums isn't just sitting in a mattress. It's aggressively invested, usually into ultra-safe things like government bonds, generating sweet returns while they wait for you to inevitably file a claim. Now, let us look at the fun guys, the ones who handle investments for regular Joes, and for the super rich, who want to gamble with extreme prejudice. Mutual funds are the investment clubs for the masses. They pull money from thousands of everyday investors and manage it professionally, giving ordinary people access to broad diversification they wouldn't get otherwise. They come in two flavors: active funds, where a highly paid manager tries, and often fails, to beat the market, and passive funds, where they just mirror an index like the S&P 500, usually at a much cheaper fee. We love the cheap fees. Contrast that with hedge funds. If mutual funds are the local library, hedge funds are the exclusive, underground poker room. They are only open to accredited investors, meaning you usually need a net worth of at least $1 million just to get past the velvet rope. Their motto: high risk, high reward. They bet on literally everything. Stocks going up, stocks going down, through short-selling currencies, commodities, you name it. They use massive leverage borrowed money to amplify their gains and their losses. It is the financial arena where the world's most aggressive and competitive minds go to play high-stakes chess. Finally, we have the institutions that make the biggest corporate deals happen. First, meet the investment banks. Think of these guys as the highly tailored, aggressively ambitious corporate matchmakers. They connect big businesses and governments with massive amounts of capital. Need to go public. That's an investment bank handling your IPO. Need to buy out your competitor. They handle the mergers and acquisitions. Need to raise $1 billion in debt. They manage the bond issuance. They are the middlemen who take a huge cut for knowing the right people and writing very complicated documents. And last but certainly not least, we have the private equity firms. These are the corporate world's version of house flippers. They buy a company, they fix it up usually by giving it a deep, painful haircut involving firing staff and selling off assets, and then they flip it, selling it a few years later for a massive profit. The secret sauce. They barely use their own money. They use what's called a leveraged buyout, or LBO, meaning they load the debt onto the balance sheet of the company they just acquired. It's like buying a house, taking out a huge mortgage in the house's name, and then making the house pay for its own makeover before selling it. Genius. Evil genius. So, there you have it. The financial system isn't a passive vortex. It's a colossal, interconnected machine. Every salary you receive, every loan you take, every premium you pay, feeds this invisible web. These 8 players work ceaselessly, often behind the scenes, to ensure the gears of global commerce keep turning, creating and distributing wealth across the planet. Understanding who they are and what they do is the first step toward mastering your own finances. Thanks for watching. If you found this useful, hit that like button and subscribe for more deep dives into the world of money. See you next time.